So we got to talk about it because I was wondering, what does Kamala Harris mean for housing? Because that's what we care about on this channel. That's what we talk about. Not everything we care about, but what is her policies? Are her policies going to be just whatever Joe thought, bring it forward if she did win? We kind of went through what Trump and Biden were, I think, in a podcast. What is calling for housing? I want to go through some of the stuff here, some notes I have, and see is it good, bad, or other. But definitely the biggest challenge any presidency is going to have, any new administration, because if she's in there, maybe the same old administration. If Trump comes in, brand new administration, but they're still going to have problems, right? Let's go through those that affect housing. Number one is going to be inflation. They're going to continue to have to bring inflation down. Number two is rates. Well, you could say rates is number one, but rates really isn't number one, because until inflation comes down, until the job market corrects, we're not going to get those rates to come down. So rates is actually top priority in our mind, but in reality, rates are not moving enough because inflation hasn't done its thing, according to Powell. And then also the jobs market, enough people have not lost their jobs. Clearly, what I'm hearing out there from small businesses over and over. So I keep hearing people, oh, the economy's great. I'm like, well, I talk to small businesses and they say it sucks. Their business is struggling. It's not good, especially people like the jewelry business. I was in an Ace Hardware store this weekend. This lady's owned this thing for 50 years. She knows all the neighboring business. She goes, honey, business stinks. So, and I said, yeah, you're a business. Did you like low rates? People come in here, redo the house, spend money. She goes, absolutely. We need to get those rates down. So this lady's probably 70 something years old. She's been in business 40, 50 years. So she's been through these cycles. So she said, it's just gradually gotten worse over the last 3 years. And, I was talking about buying stuff. She goes, oh, you should just wait because things are going to get cheaper. I go, why do you say that? She goes, well, I just think things are going to get cheaper because people aren't buying them. I was like, okay, that's interesting. So how would Kamala, let's talk about that real quick. Number one is, can she create inventory? So those 2 million houses that Joe Biden talked about building, could she build this? Let's be honest, building 2 million houses. I mean, we can't even make a decision on probably building 2 houses at the government. So building those could take a long time. Maybe by the time they get built, she's out of office, if she even made it in office. She only made it for 4 years. Number one. Number two, how is she going to help get rates out? Is she going to go pressure the Fed to cut rates and do this? I don't think so. I think she'll keep status quo. So that means she knows to get rates down, inflation has to come down. The economy has to slow even more. It has to show signs, even though it's there, even more dramatic. Credit card delinquencies are up. Auto delinquencies are up, right? We're seeing that. People obviously are out of money. Credit cards are maxed out. People are starting to tap in those lines of credit. But that homeowner, if you're a homeowner renter, you're feeling less pain than the other. So let's go through a couple things here in this article. Housing Wire kind of broke down what it means for Kamala, because, hey, why not just steal it from you guys at Housing Wire? Just kidding, but I want to go through this. One other thing is, the recent announcement of rent caps is an example of policy that is broadly understood to be counterproductive. Said David, President and CEO of the National Housing Conference, and short-term solution that ultimately leads to higher housing costs in the long run. I'm hoping that the Harris campaign will put all the policies through a filter to what's going on. Look, when you, for example, let's talk about housing, let's talk about the renters. When you talk about a national rent control, I live here in San Diego. They've been implementing more and more rent control. North of us is California. North of that is San Francisco. East, you've got places like New York. Go to a place like LA, go to San Francisco where rent control is there. Good or bad, what you're going to get with rent control is very simple. I live here. I'm dealing with it. I'm involved because I own apartment buildings here. What you're going to do is you're going to slow down investment. You're going to disincentivize people from actually fixing up their properties. Decentivizing people from investing here and wanting to buy these dilapidated, crappy properties that we have in place in San Diego. I'm sorry, but San Diego is full of old housing stock that needs to get fixed up. Who is going to do that? Is the government going to go in here and become a flipper and fix them up? No. Is it big developer? No. Is mom paws? No. You need the investors. You need the flippers. You need the people that are come in, buy these buildings, fix them up, and bring them up to market rent. And unfortunately, people don't want to hear that. But the truth is, there's so many people here in San Diego living in shitty conditions, mold-infested, rat-infested apartments because the person that owns it is giving them super cheap rent. They don't say anything, but realize they're slowly dying and killing their kids over here because they're in crappy conditions, just being honest. So the thing about rent control, it's not good. It basically, what it does, it hinders capital coming in. It hinders people improving their properties. It hinders things getting better. And what you do is actually, basically at the end of the day, you just build less, you do less, so rents go up. So it does not help. A 5% rent reduction or 10, whatever, it just starts killing people. If you're doing 5% every single year, it's not keeping up with people's income. So that doesn't work. What else does this article talk about? Talks about if the Basel III comes in, proposed for capital requirements for larger banks, that will just push up. That will basically just cost more for the banks. Then they'll just pass the loan on you. So basically jumbo loans and things like that will just cost more money. They're just going to pass it to the consumer because that's what they do. So basically the government's going to squeeze them and they're going to squeeze the consumer. And we see that right now. They're going to try to make it easier for low income housing. Tax credits program believes will make it easier to build, use housing, create income. Yeah, if we can go around and create, we don't need to build luxury apartments anymore. We need to build, in a lot of these cities, we need to build low income housing, affordable housing. Yes, let's help those people out. Let's get it. Let's drop the red tape. Let's drop the bullshit. Let's make it easier. Let's incentivize these builders. Let's do that. So that would be good. I know Biden, that was on his thing. Notably, Harris' housing policy during the 2020 Democratic primary campaign did not include anything that addressed the housing shortage. Her policy focused primarily on boosting black home ownership and giving tax credit to rent-burdened tenants. That right there is a bailout. That is going to, if we're going to bail everybody out, helicopter money, give them some incentives, give first-time home buyers money, that's great. But if there's no inventory to buy, you're going to cause housing to go up. You're going to cause inflation to go up. That doesn't seem like it's a good plan. We do not need first-time home buyer credits right now because there's not enough inventory. What you need is more inventory, more housing, and what we really need is affordability to come down, rates to come down. Because you can give somebody $10,000, but if they cannot afford it, what does it matter, right? So, and I think addressing the demand side would probably be more politically aligned than what we'd expect. So I think she is going to look down and think, what can I do politically? So she'll address rates, she'll address demand, she'll address affordability, she'll address inventory, and she'll address how she's going to help the renters and things like that. That's what I think you're going to see from the Harris. Biden, I know Biden's going to come out, and that's what I think you're going to see her push on. Obviously, I think Trump will focus on deregulation. He'll focus on getting, inflation rates and try to get housing and things like that out there. So I think you'll see that. So both sides need to focus on housing. They need to focus on the people. Welcome back to another week, another episode. Yes, this is your one and only Kenny Simpson. If this is your first time here, well, welcome. And if you've been here 50 or 100 times, I appreciate you coming back. If you don't know me, my name is Kenny Simpson. I'm a residential loan officer. That means I focus on 1 to 4 unit financing. I've been doing this for 20 years, helped over 5,000 clients, funded billions of dollars. So I'm here to educate you, help you, and answer any questions that you may have. So if you do have questions, you have comments, you have thoughts, please go ahead, comment below, hit me up, my contact details below, schedule a call, text me, email me, write me, come by and see me, however you want to do it. But I'm here to educate and break down a lot of the news out there in housing and economics and what that means for us and how that's going to impact us. And on top of that, I'm also here to hopefully entertain and educate. But if I can help you buy or refinance, that's what I do. And I've helped thousands and thousands of customers out, and I'd love to help you out. So California, we have so much always exciting news going on. But here, just like Florida, we are having an insurance crisis. If you don't know, now you know. But if you do hear about it, that basically means is we've had so many claims, so much damage, and the cost of that damage to fix it is up 30% probably within 5 years ago. Insurance carriers were saying, we're losing money, we're going broke, we cannot increase our premiums. So some are saying, we're out. We're just going to get out of the state until Gavin Newsom and his buddies up there figure something out. So in this article by the North Bay Business Journal, California insurance crisis partly cooling the real estate market. And I do agree with this because it's hard to get insurance on, especially commercial, residential, big properties. It's crazy. Some can't even get insurance. If they get it, it's super expensive. There's flood insurance, there's fire insurance, all types of insurance. It's crazy. So how is this affecting escrow policy? Nearly 7% of real estate deals in California are failing due to insurance issues, with 61% unable to get insurance and 19% finding it too costly. Ouch. Rule impact. Rural borrowers, especially near wildfire zones, struggling with high premiums and insurance denials, affecting 37% and 27% of transactions respectively. Of course. So way out there where there's a fire and all that, you used to be like, oh, great, insurance is cheap. Now, no, insurance is not cheap. Premium surge. Insurance rates have increased 20%, complicating the buying process, forcing homeowners to settle for less coverage or self-insure. Also, too, think about it. There's people that are getting their renewals on insurance and insurance going way up through the roof. They can't even afford their renewals. It's crazy. So insurance is absolutely becoming a problem. Sales decline. High insurance costs and interest rates are reducing housing sales with significant in Sonoma, Napa, and Martin County. There's other counties too, like the LA, that are having to deal with that. And on top of that, they have the mansion tax. So yeah, California's getting its butt kicked in some of these places. Luxury market. Despite challenges, the luxury market in San Francisco Bay Area remains relatively stable compared to early 21 and 22. That's because there was the lockdown and all that effect was real and crazy. So what if I told you? What if I told you in 2024, the first half of the year, that 51% of homes that sold, are you listening? Are you sure you're listening? 51% of homes that sold, the appraisal came in higher. They came in more higher than the sales price, 51% in 2024. It's crazy, right? That is what's going on. In this Housing Wire article, they talked about the half of the home sales sold appraised for more than the sales price. Majority of appraisals, steady increase. The figure has steadily increased from 42% in 2020, reflecting ongoing market dynamics. So it's even increased from 2020, it's gone higher. Significant over appraisals. The average appraisal value stands at 8.9%, highlighting substantial gaps between appraisal and sales price. States such as Kentucky and North Carolina have particularly high rates over appraisal properties, showcasing regional market differences. The rising appraisal gap indicates challenges in accurately valuing home in a rapidly appreciating market. Demand and competition, competitive bidding and high demand are major factors in contributing to home appraised above their sales prices. How's this? I've had 2 files in the last 2 weeks, multi-million-dollar properties. They both came in. One appraisal, let's say, came in at $3 million. The other one came at $4 million. $1 million higher. Both appraisals were different. I was like, how's this possible? How are you $1 million apart? It's not a $10 million property. We're talking a $3-4 million property, or a 4 to 5. This is crazy. It's insane. So in the CNBC article, the consumer struggling with home affordability, says Zelman's Alan Ratner. So Ivy Zelman has a firm where she is one of the gurus of studying housing and forecasting and sells that information to builders and real estate investors and all that. She kind of predicted the crash. So this person is on her team. So let's go through the consumer struggling with home affordability, and let's go through the dynamics in this article, what they talked about. Despite a promising start in early spring, the new home market has become stagnant. I do agree with that. I was talking about that here in San Diego with some agents. The market is definitely grown stagnant. I'm hearing that all over. Things are sitting, they're taking longer, and I don't know. I don't know if it's the election, if it's the rates, it's the temperature, or what's going on with affordability, or people are just like, I'm going to wait. I know they're going to cut rates. I don't know. I just don't know. But with affordability being the big challenge for consumers, which is for sure, it doesn't matter. High mortgage rates are still high in the 6s, making it difficult for consumers to afford homes. Inflation optimism exists that lower inflation reduce mortgage rates, though this may be overly hopeful given the economic situation. Rates will eventually come down, guys. I am hopeful that it's just taking longer. When you print $9-10 trillion and you know the story, this is what happens. Like, it's insane. We're living it. Recession concerns. A potential recession could negate any benefits from lower mortgage rates impacting home builders and demand. That is true. Bond market pricing. The bond market has already been pricing in rate cuts, suggesting that the Fed actions might not have a direct impact on mortgage rates. Soft landing hopes. There is hopes for a soft landing in the economy to avoid severe impacts in the housing market. This is true. One thing that nobody talks about, as I talked earlier, is the spread between the 10-year and 30-year. That has come down over half a point. Folks, if not, our rates would be a half a point higher. So let's thank you to the spread people and the spread data and whatever's making that goo happen. Thank you very much, because that's helping affordability. It's helping to keep buyers, because if not, the market would be even worse than it is. Look, I agree it's kind of doom and gloom for buyers, affordability and all this, but look, we are starting to see the economy sputter. with jobs, inflation, consumer, and unfortunately, I hate to say it, but yeah, a slowing economy will help rates. Too much of a slowing economy can affect housing in the opposite way. But having a soft landing, getting rates down, getting it more affordable is where we need to be at for sure. Are you saving enough as a consumer? Like, are you really saving enough? And if not, here's some tips and tricks to help you out. Here's how to put money back in your wallet in this NBC News article, which I love. Are you saving enough? Here's how to put money back in your wallet. Current savings rate. Households are saving 3.9% of disposable income, down from 5.3 last year, significantly lower than pandemic peaks. Pandemic, folks, when we were locked in, we're at 3.9% savings rate. Do you remember what it went to? It went up to 35%. That's insane. And credit card debt came down hundreds of billions. So maybe we just need to get locked back in. I'm just kidding. Financial strength. High living costs, interest rates are making it tough to save, with 58% of adults uncomfortable with their emergency savings. Negotiating bills. Consumers are encouraged to negotiate lower bills and credit card rates, which many have successfully done. Subscriber review. Cutting unused subscriptions can save money, with Americans spending over $60 a month on streaming services alone. Utilize gift cards. Many people have unused gift cards, and you can selling them can get extra cash. Energy efficient, reducing costs. Energy efficient makes it easier. Seal leaks, close blinds, turn the appliance off peak hours, be conscious. But one thing I can tell you folks is how to save money is, let me give you a couple other recommendations on top of this article that I learned doing the loan business for so long. So number one is you should pay yourself first. So when you put money away, you need to act like it's a bill. Just act like it's a bill. So if you can't pay this bill, you need to get rid of something else. Like, get rid of something that you don't need. There are things you don't need. Number two, every year you should print up your credit card, your bank statements. Yep, this is not fun. And you should go through all of them, everything, and make sure there's no junk, there's no this, there's no that, there's no charges or things like whatever. You'll be surprised what you find. You'll be surprised the patterns. You'll learn more about yourself. I spent way too much on food, spent way too much at the bar, spent way too much on travel, whatever it is. Go through it all and then start cutting. And then the subscription thing is huge. Like, do you need all these subscriptions? Cut them. But pay yourself. Put money away in a savings, a checking account. Just put money away. Start acting like a bill. I don't care if it's $5, $10 a month. Get used to that. When you make more money, bump that up. Because if you're trying to buy a house, invest in real estate, save for retirement, you're not going to do that if you do not treat saving money like a bill. Last but not least, in this article, thought I'd bring this in. CNBC, international buyers are pulling back from the U.S. housing. Why? Decline in purchase. International buyers purchased 54,300 existing homes from April last year to March of this year, a 36% drop from the previous year. Reduced dollar volume. The dollar volume fell 21% to $42 billion, the lowest since when? Listen, since 2009. Are you paying attention? Top buyers and locations. Buyers from Canada, China, Mexico, India, focus on Florida, Texas, California, Arizona. Did you see, folks? I know you're like, California sucks, nobody's moving there. Well, guess what? The foreigners like it because they want to be here. I know the politics are a bunch of crap, but hey, it's a beautiful place. Barriers: a strong U.S. dollar, tight supply, high prices, and traditional currency banking and title challenges deter foreign buyers. So you can clearly see, guys, we're starting just to see over and over in so many different aspects of the economy as we go week over week. And I remember it's like a week over week with the data, month over month. We're clearly seeing people start to pull back. People start to think about things. International buyers, the consumer. We're feeling it. You're feeling it. You talk to the business owners. We are starting to see it. We've got an election year. We've got Powell ready to cut rates. We've got inflation slowly still coming down. We got the job market starting to crack a little bit. We got the consumer already cracked, right? Auto delinquencies, credit card delinquencies are up. We're setting the stage for the perfect rate cut scenario for September, hopefully December. I don't know if it's going to be 20 or 50 basis points, whatever it is. We need to start the train. We need to get it moving. And then have a great week. Until next time, I will catch you guys in. And remember, hit me up. Hey, if you're watching this on my YouTube channel, subscribe, share this with somebody, like it, give me a comment, hit me up, give me some feedback. Love you guys. Have a good week. Talk to you soon.